And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, February the 20th, 2023. I hope everybody's had a very enjoyable long weekend as we wind up here and get ready to trade our own sessions tomorrow morning. Many of you have already heard the big picture update, which got posted yesterday. First of all, I apologize. Once again, moving too fast, didn't realize the date, put up the wrong date, called it the big picture update, and it was actually Thursday night's update. So I apologize for that. The correct one, of course, is now up. And so I have now, across the board, put in the completion points for the intermediate B wave. Now, is that cast in stone? Obviously not, because I continue to leave open the potential that for whatever the reason the market wants to find, we're going to turn, we're going to go up, and we likely could end up 4150 to 4200, even above. Does that still exist? Yes, it does. Is that something I'm actually looking for? No, but it would not surprise me. The market continues to just play around at the same level where we left it on Friday. So I'm not sure what players are now looking for. We are now down a little bit here in the S&P, starting in the Globex session Monday evening, but not much. We're not falling apart. So here's the deal. I'm going to give a quick update on the market, which basically has not changed. And let's see what we can come up with. Again, if I am marking this C wave complete, remember what we're counting was an intermediate degree B wave. It consists of an ABC of a minor degree. We were in that C wave, which consists of 5 waves of minute degree. The market failed to go up and take out the high at 4209. And therefore, that's where the failure comes in. So it was approximately about 23, 24 points. S&P point failure, not huge, not small, but kind of in between. And if that is indeed going to be marked as the completion point, then what we're completing right now, I'm going to go down onto the hourly chart, is 1, 2, 1, 2, 3, 4. And now we're going to come back down and hopefully come back in and create a new low, put in a 5, and that's just going to complete this third. Then we're getting another 4 and a 5 that's going to complete 5 waves from this level, and then we're still going to get another correction. So we're going down, but we're going to have to do every single step in between. But I think we probably could be set for another stronger down leg that has a very strong potential that it can take us for that first leg down below 4,000. Now remember, I don't know, because we're going to have to check and see tomorrow, that we were looking that there was a wall, what we would call a put wall at 40.50. And that's where I believed a lot of positions got rolled out, because it first existed for Friday's expiration in the S&P. Didn't happen. A lot got rolled out. And so therefore, we may be getting it this expiration week. Yet to be seen, but I believe it would still be there. And I know some of it actually has been rolled out into March, which just gives them an additional week. So nonetheless, I believe it's still there. The market has plenty to go on in terms of reasons to continue to correct, the biggest of which is the current moves that are going on in the bond markets in the way of the Fed funds rate. The Fed funds are now pushing towards 5% and over 5%. And in response to the Fed continually saying that interest rates are going to remain high, we are going to continue to raise for the foreseeable future now. So again, why the equity markets would want to hold up here versus going ahead is still pushing towards a narrative that I'm not sure what it is now or why it would still be in play, but there's still a feeling that the market will move higher, get up to 4,300. Now that conversation is still out there. 4,150, 4,200, 4,300. It's still out there. I personally don't see it going up quite that high, but I do believe that the market has the ability that it can go back to 4,150, it can go back to 4,200, and then crash, basically. I don't want to be that harsh about it, but they go down, and it's going to go down pretty severely. I mean, if we consider that every time we're holding the market up, it's an injection of money. There has to somebody's spending money to hold it at these levels. Otherwise, the sellers would just start hitting it. But so we're not really getting that sell pressure either. So I would not necessarily want to buy it, but whoever is. My point here is that the market is likely just to continue, but as long as they hold it up, it's like a spring being wound and wound and wound, or a pressure cooker that it takes a while for the water to pressurize, to reach boiling, and then throw off steam and pressurize what's inside that pressure cooker. And the valve will flip, and then you get the whistle. And so what we may be at that is just that boiling point, and then we're going to get it, and it's going to pop the top. But right now, this has been so wound up and so wound up and so wound up that the pressure release may not contain it. And so instead of just being a pressurized release of steam, it'll be a strong drop, as if the lid is come right off of it. So what does that suggest? We go down and we smack through that wall, that 40-50 wall. And if that's the case, again, it would likely begin to put in some stronger selling as the market then realizes, okay, we hit a point, people turn seller. So there would be that. Next, below that is likely going to be 4,000. But again, if we're going to be inside this larger move down and it's in the beginning stages, remember, we have 1, 2. This could be of that first minute or minor wave down. Can't tell just yet. So, but anyway, 1, 2, and then we subdivide. 1, 2, 3, 4. If such, maybe it has a little bit more. I don't necessarily want it to come back above 4,100, but it certainly can. Right now, it's got the hourly 50 sitting at 40.90, 40.91. That's a target, but again, we now are just continuing to move lower. If it picks up steam, basically don't have a whole lot in between here. One thing I can put on, if we are looking for a fifth wave inside this tiny move, then we are going to go like this. If I can just open this up a little bit so you can see what I'm doing. I'm going to just put in the extensions. Well, that didn't work. How about I do that again? I'm just going to put in the extensions. And we're going to go up to that high if that completed the whole thing. So what we look for in a wave 5 is wave 5 would be 0.618 of wave 3 at 40.35. That may be a spot. If it gets itself going, guess what? Wave 5 would be equal to wave 3 at 4,000. Now, again, remember, 1, 2, and then it subdivides. 1, 2, 3, 4, 5 of the 3. So 4,000, perfect. Let it stop there, hold that support, give us a nice bounce. In a fourth wave, come back down in a fifth. Then we're down 1, 2, 3, 4, and then the 5 certainly would be able to bring us down below 4,000, where again we might find some support at like 39.50, for example, and then bounce again. And that happens there, instead of it being a 4 or a 5, we're wave 1 down and we're doing a second wave. So there's going to be plenty of opportunity for the market to kind of keep itself alive to an upside scenario, because we go down and then we rally, and we go down and then we rally until we finally get to a larger third wave, and then it just gives it up. Now, it can, within this particular small fifth wave, give it up and go past that 4,000. We could go down here. It's just going to go to the fibs, but does not suggest that it's anything other than still completing that small third wave in here. So we have some choices. 4,000 down to 39.50 is going to be the support area where the market should find itself at least maybe an overnight, or an hour or 3 or 4, whatever it's going to take, as a resting point and mount some form of a rally. So that's that story. We got now the market on the hourly chart. The 200s, they're starting to slowly turn lower. The 50 is gone from flat to beginning to turn lower again. The 20, everything is in alignment. We got the 4, the 8, the 20, the 50, the 200s, all in alignment to continue to go down. So I'm not really getting any indications off of my hourly moving averages that we're going to turn and we're going to just continue to go higher, but that can switch. They're all sitting right there. I'll just open this up a little bit, and so that you can see that, and then open this way and then bring it back down so that you can see where the positioning is. See, they're heading lower, but if they just turn and start to rally, these will go, they'll stop, and they'll go with. So that is the S&P. Over in the NASDAQ, it's pretty much the same deal. Here again, on the hourly chart, I put in already what we can expect in terms of the larger move down. And those are these outside. And now I'm just putting down, what about this little wave 5? So we're into that same position in the NASDAQ. And here I just put in what we would want to consider for a completion of this third wave. And we're down towards 12,214.15, down to 12,189. That might be, I think we definitely should come in and put a new low below 12,266, which we did on Friday morning. So actually what was this? That's giving me something much different. 12,000, oh, because it was up here. It dropped pretty quickly, but that got us down to 12,265, almost 66. And then we rallied into the close due to the expiration. So we're still kind of playing around. We're in a tight range. We're not really willing to go above 12,400 with any intensity, and we're not willing to go below 12,320 or 330 with any intensity. So here we sit. I would think that we need to go in and fill the blanks, and we need to likely drop to at least 12,014 to 12,190. We have down here on bottom side 12,100, and that could be where 1, 2, 3, 3. So that third wave, and then a fourth, and then a fifth. Either that, we come down to here, we do the fourth and the fifth, and we get our first 5 down on the hourly chart, which would give some stronger confirmation to this point actually being the failure point and being the end of that intermediate B wave. So I continue to look for more downside from both markets. Upside scenario, it is still alive for both markets. But again, if they're going to start this tomorrow, leaving this as a 3, which they could do, they really could, then it's going to have to have a catalyst. So something that's going to spark that people and investors and traders and whatever are going to move in and they're buying. Now, it could be, again, limited to Apple, Meta, Microsoft, NVIDIA, Tesla. I mean, Tesla, they had to have it above 200. They had to have it above 7.5. They had to make sure that it all closed up there. But in any case, the market bought a little bit more after. So who's right, who's wrong? I do not know. The stocks don't reopen until later during the night. Once Europe opens, and I guess that part of Globex opens, and you're able to trade the stocks. Now, So my guess is that we continue to go down. I am going to leave it there. I went over quite a bit in terms of for the bonds within the big picture update. If you've not listened, go ahead and take a listen. You can work your way straight to the bonds and or listen to the whole thing. But in any case, our next update will be on Tuesday, February the 21st.